Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be taking a look at Bitcoin on the macro level. This is the daily chart, the weekly chart, where I expect things to play out over a few months. Now as I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe. By tapping the bell and selecting all the notifications, you will be kept up to date with everything that we do here at Cheeky Crypto. Now if you haven't yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into this video. I don't think it's going to be an overly long video. Just going to give you a brief update as to kind of what I see going on here with BTC, and give you kind of all the things that I think are important to know. So let's start things off with our smart money concepts. Then we'll jump down into some of the Elliott-Wave theory, and then have a look at the supply and demand ranges and stochastics and things like that. So we'll start here. So as you can kind of see, we are in a situation where we have higher highs and higher lows. You can see that this is reasonably consistent as we kind of look to push this up fractionally higher, right? We can see that there. We can also see that we have some higher lows, okay? And again, this is all the way down on this low range at the moment. Ultimately, when we see higher highs and higher lows, unfortunately, these have a tendency to want to break on down. At the moment, we are looking at the fair value gap that is sat between $25,000 and $26,500 as the obvious area for finding support in it. As in, this is an area that we kind of had created an imbalance in the order books, so there's a lot of buy orders, not a lot of selling here, and chances are that we come back down, fill this area, and then buying can continue. We also note that our 200 EMA is actually fast approaching this range as well. So it'd be good to kind of take out one of these fair value gaps, which would be the first in many, in my opinion, that are yet to be filled out on the move to the downside. Our equilibrium at the moment is actually sat below our upward trend line here on the higher low situation. Now, at some point, I imagine that we are going to have to break this trend line to the downside, and we're going to have to break this trend line to the upside and break on down into these lower ranges. But I wouldn't expect that to happen right away. I would actually expect a bit of a significant bounce up beforehand. So I wouldn't be too surprised if we kind of create ourselves some kind of like wave 3 situation here. We come up into this previous area of demand, and then we break on down into a final fifth wave here. And then once we have broken out, I think there'll be a lot of shorts that will get squeezed with a bit of a surge to the upside as we kind of look at these upper areas of resistance between 28 and 29K. That there would allow us then to look at this either as a zigzag pattern, just bringing us down into these deeper ranges, or as a potential impulsive. But we'll talk more about that in a moment. Ultimately here, I'm just trying to show you how Elliott-Wave theory and smart money concepts seem to work together quite well. We can see that there is the 200 EMA, which will act hopefully as a support level as we get rejected from our 50 EMA, which is our red line. These fair value gaps, these imbalances in the order books are key. I think we're going to see a move down to equilibrium and to fill out this mid-level. This is basically 22K to 24K. Okay, so I do expect that to be the case. I do expect us to move down into these ranges at some point and then have a bit of a relief rally back up again. And we'll probably look at this previous trend as our area of resistance in the future. But again, we are talking several weeks out before we'd even see any of those kind of movements take place. Ultimately, we can see down here, we have another fair value gap. This one's 20 to 21,800 approximately. So again, we can see that we're stacking up these fair value gaps, which is very unusual. And then down here, a little bit lower is 19K. So we lose a 20K area. We're going to be talking about moving down and filling those out. Now, from our smart money concepts, despite the fact that we have higher highs and higher lows here, we do have a bullish change of character. Okay, this essentially is right in here. This shows us that we have changed our direction from our bearish state of play to a bullish state of play. Okay, this is yet to be confirmed. Okay, so although this shows with this move here to the upside, it doesn't look like that's necessarily going to get confirmation until we break up higher once again a little bit further down the line. And just note that this, although there's a bullish change of character here, it isn't uncommon for price to retrace down lower than the change of character to then get another run upwards, breaking the previous high, confirming that we're actually in a bullish structure. Okay, it's possible that this is a false signal, okay, as well. And if we come down lower than this level here, it's likely that we're going to change our structure and we're going to have another bearish state of play get confirmed down here. Okay, so we say confirmed, but flag up, the confirmation being the break of structure, or the CTS. So from a smart money concept point of view, it does look like we have some interesting kind of retracements to occur all around this equilibrium area and the fair value gaps. And this isn't uncommon for a change of character to a bullish state for natural moves to the downside. On the daily chart, we can see that we have a strong low not likely to get broken at the moment, and a weak high likely to get broken at the moment. This is testament to that change of character here, and the way that we're above equilibrium and the 200 EMA. Keeping a close eye on that weak high, whether or not that's going to flip and change into a strong high, is going to be really interesting. As we potentially come down even lower, it's possible that that becomes a strong high and this becomes a weak low, and so we'll keep a close eye on that. Specifically, the change of character, weak high, strong low. Those are three key pieces, along with equilibrium. That's important that we kind of keep an eye on them. Moving on, we'll jump over into our secondary chart here for smart money concepts. Now, for Elliott wave theory. As we were kind of talking about there briefly, that we have the idea that wave 1, wave 2, wave 3, wave 4, wave 5, something to this effect, will allow us to have a swing trade opportunity to the upside, where we talk about 29, possibly even $29,000 right up here into this previous area of consolidation. This will allow us then to come down into a 5-wave structure minimum, taking us more towards, and I spoke about this yesterday, more towards our kind of Z-wave structure at around that 19,700. This particular play would essentially allow us to correct down very healthily and allow us to hit all of those fair value gaps and then progress on out of here in the next bullish market. So this would be a very nice way to kind of end this retracement and then basically make me turn bullish on the market. Okay, so until that happens and we break up higher than that area there, I'm still on the bearish side of things at the moment. It doesn't quite feel like we're ready to see any kind of bullish movement in the market. What I'm looking for is significant downside, a lot of retail to get shaken out, and I'm looking for whale investors to continue buying, and I'm looking for the right signals within our chart data to say, yeah, that we're more than likely now at good points to be confirming bullish movements to the upside. For now, everything else is quite hit and miss. You can speculate that maybe we are bullish, but for the most part, it doesn't look that way. From the lens that I'm looking through. Now, you can see potential bullish movements within the stuff that was going on right now. So if I grab a parallel channel here, we can see that if I draw this on right in here, that we are going down into lower highs and lower lows on this daily chart. And that there usually means that we get a break to the upside like we saw over here, for example, okay? Now, these things only really happened a couple of times. When we tilt in the other direction, we obviously see the breakdown. So we're still currently in the high low breakdown over here, and we have entered into this previous range that we were highlighting, 25 to 26k. We kind of tapped into this. I still think we have further to go down. We're looking at that 200 EMA specifically, and we are looking for 23,937 to really allow us to kind of get a good movement to the downside overall. But, you know, it's an interesting one to kind of note that on here, on this daily chart, that we do have that potential set up for a bit of a relief rally. I just don't think it's necessarily going to happen just yet. I think we have a little further down before we get that relief rally to the upside. Other than that, everything here is looking okay. As I said previously, I really do want us to kind of just come down towards 19 to 20k, get that filled out, hit that Z-wave structure point, and stay with the current low. I suspect that we have to have a new lower low just because of the different players that are buying. At the moment, we're heavily retail, a bit too heavy on retail, and I'd like to see more from institutional players playing with Bitcoin and getting involved in Bitcoin. So for now, it looks like this is it looks like it can hold by this yellow box area saying it doesn't have to go down deeper. But I would assume that considering most of the Bitcoin whales were selling all down here, that price has to kind of lose this low. So it'll be interesting to kind of see how that plays out over time. Ultimately, this is a nice little retracement that could be had here, and then we could get that reversal in the market that so many people are looking for, myself included. I'm looking for the bullish market. I just don't think it's there just yet, at least not confirmed to be such. So I'm waiting for this retracement. I'm waiting to see how low this thing can go, and then we'll kind of act accordingly. At the moment, this is quite an insignificant retracement over the rally that's already happened. So we've got further to go, significantly further. In fact, we've only dropped down, what's that, 16%. I would expect us to drop down at least towards this level of 36 and tap into this range. So my expectations are that we have a significant move to the downside yet to play out. What the catalyst will be, you can pick and choose. There's a number of different things going on in the space, and we haven't really seen a lot of them play out just yet. So looking for further downside on this chart, that's quite clear. Whether or not we come down as deep as this is going to be interesting to kind of see how that plays out, and whether or not we get a new lower low. Also, we can't confirm that until such a structure starts to show us with the patterns showing us that we have to. The big fear, of course, is that we have corrected up quite massively here from these lows to these highs, and that can be seen as a big A, B, and C structure, taking us down into sub 10K ranges. That's the big fear. We don't want that, but it's a possibility, so we should acknowledge that there is always that possibility in the background, and if that does play out, that's a fantastic opportunity, but it does mean that it's going to be quite a bit of time before we actually see a nice significant run on Bitcoin. Ultimately, when the Fed pivot, we will see a significant downward movement across this space. So the question becomes, can Bitcoin pump up significantly high enough that when the Fed pivot, we don't set those new lows and we don't have that catastrophic sell-off taking Bitcoin's price into to some crazy kind of low levels. But it'll be interesting to kind of see. If price does come down into that sub 10K range, then yeah, I think there's going to be some very happy investors, but unfortunately a lot of retail will potentially get wrecked on that journey. Moving over into our weekly time frame, we can see that the weekly stochastic RSI has come down quite nicely. It's almost down in the oversold ranges. Now we can note that we can be down in oversold for a very long time. Over here we can see that we had 133 days down in that oversold area, and so although it's great that we're seeing this correction come down, it's going to take weeks of being down there before we might see reversal in the momentum indicator that is the stochastic RSI. So although we can see this is good, considering we've only really had a small retracement, we should be aware that this can go multiple different ways. For example, we can tap very briefly down here and then bring the stochastic all the way back up to the overbought and then come back down again without actually doing terribly too much to price. This is not, stochastic RSI is not an indication of price movement. It's an indication to how strong the movements are in price. What I mean by this is because we haven't really got too much selling pressure right here, the stochastic RSI is able to go from a high overbought range down to a lower oversold range, okay, without doing too much in price movement. If, however, there was a huge amount of volume selling off and Bitcoin's price was to drop down quite significantly, let's take this one over here, for example, then it will move slowly down to this oversold range and then come down into that area and sustain down here for as long as it needs to before rallying up. A good example of the rally to the upside is actually this one just here. We went from oversold to overbought without doing terribly too much in price movement, and then we come all the way back down in terms of price. We actually also moved up here very briefly, just in this little gap, back to this overbought range before we drop down into those final lows. So just note that this is not an indication to price, but is an indication to how strong the price is moving. Okay, is the momentum behind the price movement strong or weak? Okay, so when we talk about overbought and oversold, we basically are saying that we're running out of momentum to the upside or running out of momentum to the downside, and we expect reversal within the price action due to the stochastic RSI momentum indicator. So it's worth noting that we're heading down to oversold. We're not oversold yet, and when we get there, we can be there for a while, so just bear that in mind. Now, when we take a look at our supply and demand areas, we can see that the previous area of demand has turned into supply. We got rejected. We have obviously found ourselves with support on the 50 EMA at the moment, and this 50 EMA happens to coincide with our range of 24,300 to 25,200, which is also a previous area of resistance that we're looking to try to turn into support. This range, which also fall in line with our 200 EMA on this weekly time frame as well. So interesting kind of stuff occurring within there. Good things to kind of keep an eye on overall. Now, as I kind of pull this back a little bit, my concerns that I have on the weekly time frame, specifically also kind of relate to the monthly to a degree. We have here the idea of higher highs and higher lows, potentially taking us down into that kind of really bearish situation. Now, we can see that we've got some key areas of note. Down here, for example, we have the 11,600 to 13,900. A little bit deeper than that, we have the 7,000 to 6,000. Okay, so we know that if this is a big ABC structure, that big fear that I have, A, B, and C, then we do know that there's going to be some interesting areas of support to be found on that journey to the downside, and some areas where price is going to react to it and so forth. On the weekly time frame, it's very interesting with all these things that are going on, but if we jump over to the monthly, we get even more fear. Unfortunately, we can see that we have moved from oversold, which we were down here for a very long period of time, almost back up to the overbought range. Now, we can be up in the overbought for quite a few months, for sure we can, but at some point that's going to have to come down quite massively, and that is a bit of a concern for us. So just bear in mind that things here are not moving necessarily how you'd want them to on the monthly time frame. We can see that we're up in this big area of rejection, previous area of demand turn into supply, and we can see that the 50 EMA is just down here at the moment. If we lose that monthly 50 EMA, I think there's a high probability that we're going to come down quite significantly. So concerns on the monthly, I have a little bit of concern on the weekly, but not terribly too much. We have some momentum on our daily time frame, so again that's looking okay, but ultimately I think if we jump down to the 20-hour, we're still looking for further downside. We're currently finding support on that 200 EMA there, getting wedged up also in that 50 EMA. On the 16-hour, we also have a very similar situation. You can see finding support on the 200, but getting rejected on the 50, and those two are about to cross. On the 12-hour, very similar story. You can see how we're getting coiled up here as we come down these time frames. Right in here, we can see that we've lost the 200 EMA on the 8-hour, and are also looking at the 50 and 200 EMA about to cross. If we come down a little bit deeper onto the 4-hour, we already had the cross and we saw the negative price action, and we're currently getting rejected on the 50 EMA. And on the 1-hour chart, let me make this a little bit clearer, we are getting rejected on the 50 EMA, and our cross happened quite significantly further back as well. So ultimately rejected on the 200, rejected on the 50. It's not looking great on those timeframes. If we take a look at our divergence indicators, bring this up into our daily, nothing to kind of note here at the immediate time frame, other than the fact that it does look like we have gone up higher highs here while going down lower here. On the 20-hour, nothing of note. On the 16-hour, hidden bearish divergence. So again, not looking overly promising here as we come up into, that's the one I was looking at on the daily, by the way, guys. So interestingly to see how that one's going to play out. On this 12-hour, nothing of note other than what we've already spoken about. Again, more hidden bearish divergence on our 8-hour, and on the 4-hour, slightly bullish here, bullish divergence indicated right on there. On the 4-hourly, and then on the 1-hour, more hidden bearish divergence. Ultimately, I think we've got more bearish situations occurring here for Bitcoin than we do have on the bullish side. So bears, I think, have control at the moment. Be interesting to kind of see how that does play out over time. But for the most part, my expectations are at the moment further downside for Bitcoin on the macro timeframes. But we're hoping to find good support, and once we do, we should have a relief rally to the upside. I'm going to leave the video right there though, guys. If you did find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done out of the way, guys, I hope you have a fantastic day, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.